Today, I want to bring your attention to a startling statistic. 93% of recent home buyers are filled with regret. These individuals, caught up in the frenzy of the housing market during the pandemic, are now realizing the mistakes they made. They believe they've overpaid for their properties and failed to consider the high costs of insurance, taxes, and upkeep compared to renting. In fact, the rising costs of home insurance have become so unmanageable that many homeowners are contemplating abandoning it altogether. As we examine these alarming statistics and delve into the reality of the situation, we must ponder whether it is solely the middle-class Americans who bear the brunt of these difficulties, or if even the wealthy are facing similar struggles. A clip featuring Josh Albin, a prominent figure in the real estate industry, sheds light on the experiences of high-end home sellers and buyers. Even those dealing with properties valued between $10 million and $50 million are not immune to the challenges plaguing the market. The financial strain of having mortgage payments double or even triple their salaries is an immense burden. It is my firm belief that we are on the brink of a tumultuous period in the housing market, resembling a fierce tug of war. Homeowners will desperately cling to their properties, but the relentless pull of the economy will prove too strong for many. The impending consequences are going to be devastating, surpassing the hardships witnessed during the housing crisis of 2008 and 2009. However, amidst this turmoil lies a golden opportunity for aspiring investors. The chaos in the market will present incredible deals for those bold enough to seize them. This moment, though uncertain and tumultuous, may very well prove to be an unprecedented chance for fresh investors to make significant gains. Let's delve into the current situation. Astonishingly, a considerable portion of Americans who have purchased homes find themselves regretting their decisions and facing financial hardships. According to recent statistics, an overwhelming 93% of home buyers are experiencing buyer's remorse. This figure is incredibly significant and highlights the intensity of the situation. Furthermore, a majority of these buyers, accounting for 56%, assert that they have paid too much for their properties and are struggling to cope with the financial burden. In examining the perspective of first-time home buyers, an alarming 63% express remorse over their purchases, believing they have paid an excessive amount. It is worth noting that the average down payment made by first-time buyers is a mere 6%. Considering the costs associated with selling a property shortly after purchasing, estimated at around 9%, this situation becomes even more troubling. Such expenses include realtor fees, transfer taxes, and closing costs. This data underscores the need for caution and thorough research when contemplating a home purchase. The prevalence of buyer's remorse among Americans signifies the importance of making informed decisions in the housing market. By taking the time to educate yourself and analyze your financial capabilities, you can mitigate the risk of falling into this regretful majority. When analyzing the current state of the housing market, it becomes evident that a significant portion of new home buyers find themselves in a precarious situation. Right from the start, many are already underwater on their purchases if the value of the property fails to appreciate. As costs continue to rise for these homeowners, they will face difficulties in qualifying for loans and maintaining their payments. The issue lies in the fact that these buyers qualify for their purchase based on their current levels of debt and income. However, if their debt levels continue to increase while their income remains stagnant, they will encounter problems. This is a major concern highlighted by real estate expert Josh Albin, who states that the situation is nearly impossible for these individuals. A particularly impactful example can be found in Fortune magazine, where a woman and her husband reveal how their annual insurance premium skyrocketed from $1,200 to $9,750. This significant increase in costs further exacerbates the financial struggle faced by homeowners. The current climate is reminiscent of the housing crisis experienced in 2009, with individuals now searching for options such as late payment mortgages and home equity lines of credit at unprecedented levels. Even though some homeowners have secured low mortgage rates around 2 or 3%, they are still seeking alternative solutions. Memes circulating online highlight the excitement surrounding obtaining a 6 or 7% mortgage rate, emphasizing the importance of striking the right balance between rates and the overall price paid for a property. In today's housing market, it is essential to make a wise purchase decision and secure a favorable mortgage rate. The current mortgage rates are quite low, with standing rates at 3.7%, which is less than half of the prevailing rate. Astonishingly, a significant 22% of borrowers are enjoying rates below 3%, while only 9% have rates above 6%. This discrepancy contributes to the housing market being 40% below the historical average, resulting in new homes selling for less than existing ones. Additionally, official inflation data indicates a cumulative inflation rate of 19% from January 2020 to December 2023. This means that if you were earning $100,000 during this period, your purchasing power would have significantly diminished due to rising costs. However, some individuals argue that unless your earnings have increased by 34% between January 2020 and October 2024, your purchasing power has kept up with the rising costs. For property owners who purchased homes without access to credit lines or equity, the current situation can be quite challenging. These individuals are banking on a Federal Reserve pivot, hoping to return to the more favorable conditions of 2018 and 2019. However, it is clear that reverting to those conditions is unlikely, and the road ahead will only become more difficult. As a reflection of this reality, pending home sales have dropped to the lowest level in 20 years. Home buyers, once desperate to secure deals, are now taking pause and reevaluating their options. They have realized that it is often much cheaper to rent, with buying costing 52% more. Renting also eliminates the burden of maintenance, insurance, and skyrocketing taxes. Property taxes, for instance, have increased by 18.5% in Vermont, and this trend is common in many areas. Insurance costs are also rising, with Texas homeowner insurance rates surging by 22% in 2020 alone. While many people have relocated to states like Texas and Florida, they often overlook the rising costs associated with these areas. Consequently, it is conceivable that we may witness a situation where individuals find themselves unable to afford their properties and may choose to walk away. When faced with an affordability crisis, individuals earning a yearly income of $100,000, or roughly $8,000 per month, may opt to rent for around $5,500 per month instead of paying for a mortgage that costs approximately $3,000. This decision would reduce their monthly expenses by $2,500, enabling them to allocate their remaining income towards other necessary expenses such as car payments, property upkeep, insurance, gas, and food. As costs continue to rise, many people may find themselves forced into such financial circumstances. In the real estate market, there are certain areas that are considered higher risk. However, if you have the means to pay cash for a property, you will find that there is a smaller pool of buyers competing for homes in these neighborhoods. Typically, these areas are quite desirable, such as coastal communities or areas with high fire risk, as mentioned by Josh Albin in a video. This lack of competition can present an opportunity to buy a home at a lower price. In a high-interest rate environment, where borrowing money is costly, you may be able to purchase a property worth $500,000 or $600,000 for only $200,000 to $250,000 as the economy worsens over time. By putting yourself in a favorable situation with a solid business and strategy, you could potentially purchase a great property outright without needing a mortgage. Instead, you would only need to pay the property taxes. As a result, I believe we will witness a decline in the American housing market. This trend has already begun to emerge. For instance, in July, there were 646,000 active homes available for sale. By November, that number had increased to 754,000. It is unusual for a healthy housing market to experience more homes for sale in November compared to July. This trend is likely to continue into December, January, and beyond. Soon, sellers will find themselves pursuing buyers, rather than the other way around. Therefore, if you position yourself well throughout 2024, you stand a great opportunity to succeed at the end of that year and in 2025, allowing you to earn significant profits in real estate. We have witnessed the creation of the greatest real estate bubble in recent years. This was due to a combination of factors including 0% interest rates, easy access to money, and various loan programs. All these factors contributed to a massive bubble that is now on the brink of bursting. What are your thoughts on this situation? Feel free to share below, and let's engage in a discussion. I look forward to connecting with you in the next video.